To our panel for some instant reaction. Mona Mahajan, Senior Investment Strategist at Edward Jones. Dana Peterson's Chief Economist at the Conference Board. Betsy Stevenson, former Chief Economist at the Labor Department, currently an economics professor at the University of Michigan. Michael Strain, Director of Economic Policy Studies at the American Enterprise Institute. And we've got, for the Lease Maniac, Steve Leisman still here, or is is back, and Rick is still here. So let me start, Mona. I don't know whether you want to talk about the market's reaction. Let's just talk about the report itself. Expectations were probably ratcheted down, and then it didn't over-deliver there. Is that what we're seeing?
Yeah, I think you and Rick both nailed it on that one. Look, the market's been up about 2%. The S&P has been up 2% since the start of this year. The NASDAQ up over 3%. Some of this good number, and we think it is a good number, has been priced into markets already. But keep in mind, expectations have come down. So the 6.5% year-over-year figure we got was down from an earlier expectation of 7%. The 5.7% on the core side is also a lower number. So we are moving in the right direction. And when we see leading indicators of inflation, including the ISMs, including the supply chain pressure indices, even things like break-even inflation and consumer expectations of inflation, all are moving lower. So our hope is that the trend does continue in this direction. And in fact, we see core inflation heading towards the 3% levels by year end of 2023. So continued good trends.
Yeah, and we've seen a reversion back to where things were in stocks and bonds. Dow's back up, Dana. So is this another data point? Can we discern anything from the trend? Is it going our way if you're hoping that inflation cools?
Yes, this is a good trend, and certainly what's important will be what's in the guts of the report, whether or not it's in those areas that are demand-driven, such as rents and also services. But certainly this is in a positive direction, and we think the Fed's going to look at this favorably, but it's probably not going to cause them to not raise rates. We do think that they're going to hike at least 2 more times, 25 basis points each.
Michael, what's most important as far as components? We worry about labor, but we saw that in the last employment report. Santoli's here too, so I'm talking to Michael Strain at this point. So, wow, that's an 8 box. That's get one more row. We'd have one more row, and we'd have 12, and really get some decent analysis here. But
that's
Michael
right. We
Strain,
could all talk.
Michael Strain, is China going to be? I mean, won't commodities? Couldn't we have seen the coolest numbers from commodities if China totally reopens, and then we're back to, maybe labor becomes a tailwind at that point if it does ease a little?
It could happen. I mean, when I look at the report, I'm a little less happy about the numbers than I think some of the previous panelists are. I think overall, headline inflation is clearly heading in the right direction. We saw another month where goods inflation, core goods inflation, decelerated. But we didn't see a further deceleration in core services inflation. And that's really where the inflation is coming from. What we need is for the labor market to cool down, wage growth to cool down. And that is how we can get inflation kind of from 4.5% down to 2%. I think going from 8, 9 down to 4.5 is what we're seeing. That should be relatively straightforward. The hard part will be getting wage inflation down, which will allow the Fed to kind of get the final mile done by returning price inflation to the target. These numbers don't indicate to me that's happening. I think we're not seeing an acceleration in core services inflation, but we're not really seeing a deceleration there either. That's what we need to start seeing.